Robschild. No investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro, technicals, and a touch of crystal ball gazing. Today is Saturday, March 29th, 2025. Today's episode begins with the headline, Consumer Sentiment, coming out. That was on Friday. Today's show, by the way, also covers Thursday. I did not do a Thursday show. From a smaller sample size for the Consumer Sentiment Report, the University of Michigan survey was reporting 57.9 on this scale, which was the expected for March, and it came out actually lower, revised lower for the final. So they've got, 80, 90%, whatever their metric is, and when they got the larger amount of data, they realized, it's actually worse than we previously expected. I've brought this chart up many times before from the Fred. We have the University of Michigan Consumer Sentiment. This does not have March's data on it. If it did, it would be below this 60 line here, this gray line. Notably, we have not gone below 60 many times throughout history. Unfortunately, this part of the graph is broken because the tech people at the Fred are, I don't know what they're doing, but they're not working on making the charts better. Anyway, the last few times we've seen this throughout history, 1975, did we see anywhere below 60 before then? No. 1975, we saw it below 60. 1980 recession below 60. 1990 didn't even get down there. We haven't seen, and then the dot-com bust as well. Did not see that low of numbers, but throughout the financial crisis, we were at a sub 60 level for quite some time, and then we dipped below it again in 2011, and then not again until July of 2022. And today, we find out that March, we're back in this deep bad zone. This number being low is in line with earlier this week's information coming from the conference board with their consumer confidence report. In a nutshell, it boils down to how do consumers feel about paying for stuff? They don't feel good. They've almost never felt worse, actually. So, if you're like me and believe we're on the edge of a storm, this gives further support to that idea. Next on the agenda, on Thursday, the GDP quarter 4 was revised up from 2.3% to 2.4%. This does not add to the weight of things slowing down. However, preliminary data, like I've been saying, shows that quarter 1 of 2025 is already looking pretty clearly in contraction mode. But still, anyway, that I said I was going to talk about this report, and so there it is. And then on Friday, with the PCE data and income spending data, we had income up, spending down, so kind of cancel each other out a little bit there. We had the PCE basically flat, but the PCE core month over month and year over year being 0.1% higher than expectations. I was very surprised to see long duration Treasury yields dropping off of this news. You think like inflation being higher than expected would mean higher rates? I don't know what to make of it. We'll talk more about those charts when we get there. Next thing I wanted to talk about, M2 velocity actually also came out Thursday. It's not the most telling metric to use as far as saying where things are, where things might be headed, but we are, from quarter to quarter coming out exactly flat, 1.387 to 1.387. So it's not rising. That's the main thing. And, you don't typically have M2 money, velocity of money rising through a recession. Even if it rises at the beginning of the recession, it always inevitably goes downwards. And so to see it going flat, again, gives more weight to the case that, there is a little bit more likelihood of the slowdown coming earlier than later. Last main agenda item, I am still short gold, long GDXD. That trade has been going against me a little bit. I did not expect to get above this channel that I had drawn in here previously. I will say that, it's not typical to go above a rising channel like this. I still think Monday we're very likely to get back into this channel. I will probably try to close out at just trying to mitigate losses at this point, because I don't know how high gold can go, period. Other chartists I follow are also still bearish gold, so there might still be room for this to drop. But I told you guys I'd keep you updated with this position, and I am still holding the bag. Again, very, very minor sized position, to the point where if I lost the whole thing, it's like nothing, actually. But anyway, community topics, moving on. Someone asked about Wolfspeed stock. Let's talk about it. So I'll walk through my entire process of looking at a stock to see if it's, to see what it's all about. So let's dive right in. I'm going to start by going to macro trends and checking out its earnings per share. How much money is this company making? Is it making any money? Well, let's take a look. Right here, we have trailing 12 months. Looks like we did make some money here previously, some positive earnings from 2010 through 2014. This might go back further, I don't know, but since then we've pretty much only had negative earnings, which means this company is spending more than it's making. This is not proving to be a company that is making money, so that already makes me quite nervous. But hey, maybe this is a growing company. It's just like making big waves. Maybe its revenue is growing. In other words, all of the money coming in, regardless if it's a profit or not. What about how much money is coming into the company overall? To do that, we simply want to take a look at its revenue. I can click revenue right here. Scrolling down, looks like since 2014, 2015, we've actually decreased in revenue. That's also a very bad sign. So if I'm going to want to invest in this company, it better show me something very attractive. What I'm going to need is a very low price to book ratio, or at least current assets outweighing, current liabilities, maybe even total liabilities. Maybe somehow it has enough money to make it attractive. Maybe the entire market cap of the company is below its intrinsic value. Let's take a look. So starting with price book ratio, this is from Yahoo Finance. I see 1.08. All right, that's not terribly higher than 1, but it's certainly not a discount to its book value. Next, I want to take a look at its assets and liabilities. Let's zoom in here so you can see a little bit better. So main thing, what about current assets? What's the cash that this, oh, that's a lot of cash. It has a lot of stuff. $3 billion of current assets. That means very liquidatable assets, or generally just cash. And then we take a look at the current liabilities. So it definitely can survive right now. It has way more current assets than it has current liabilities. But compare the current assets to total liabilities, it definitely cannot cover all of its liabilities right now. So then we're going to take a look at its total non-current assets. So I'm going to open that up. I don't count goodwill, and I'm very glad this is a low number. I'm going to take a look at the net PPE. What's the stuff this company has? Gross PPE. It has land. That's good. Machinery. Good. So I'm going to discount this by about half. We'll call that 500 million. We'll discount this by at least a third. Let's call this together 1.5 billion. So 1.5 billion plus 3, 4. So $4.5 billion worth of stuff that I know that they could just sell, liquidate. Unfortunately, $4.5 billion doesn't cover their total liabilities at $7 billion. So this company is surviving on a good amount of debt, and it's not making any money. Okay, so in order for me to be interested in a company like this, to invest in it, I'm going to have to know some kind of inside information. I'm going to have to know, like, okay, they have a chip that's just going to, blow everyone out of the water. Maybe, I know something that the market doesn't know, and that's why I value it at its current market price. Can this company be bigger than Nvidia, let's say, in 10 years from now? Certainly it can. I'm not, I have no doubts. But am I going to invest money in that? Am I going to be buying shares of this company assuming that that may happen? This stock is unfortunately not for me. Negative earnings, lowering of revenue for quite a while, liabilities increasing, assets not able to cover the liabilities. No thank you on this one. But if you are an investor in this company, I wish you the best of luck. Coming up next week, sorry I just had to update this just now. Tuesday, we have job openings. This can be a real big rocker. If this drops unexpectedly, that can really shake things up. Also, Wednesday, ADP employment coming out, which acts as a precursor to the most important data of every month, in my opinion. Friday, the unemployment employment report. After all, how can you really call it a recession or a depression if everybody's employed and has all the work they need? This is the one that really, sets the tone as to what's actually happening. When people want jobs and they can't get them, watch out. We'll get to the charts in a moment. Thank you for watching, subscribing, commenting, and supporting. I personally feel great not feeling completely alone on this investment journey, and you're my community here. No major updates and daily reminders. Watch Macro Update to 1125 to hear me explain them. And watch Portfolio Update to 1125 to hear me explain my crystal ball ratings and portfolio minus the stock I just bought. On to the charts, the SPX, the S&P 500. I had no idea what to make out of Wednesday's day down because I was sort of expecting to go up or at least maybe form a flag. I said, I have no idea what Mr. Market's doing here. And we dropped on Thursday. And then Friday, holy mackerel, we dropped by 2%. Very large, a red candle engulfing all these little candles over here. This is bearish. What else can you say? The bears look very strong here. This is supported by the advanced decline line, which saw a major tick lower along with the price moving lower. So all stocks went down basically. Not all, but enough. Most of them. We also got a good pop in the VIX, closing above 20. And with that, we have the VIX futures term structure completely inverted again. So Mr. Market, as of Friday, is ringing the alarm bell. The stuff is currently hitting the fan as far as Mr. Market's concerned. Add to this the Fear and Greed Index from CNN. As of Friday, we are back into extreme fear mode. I have talked about how we were in extreme fear mode and we went back to fear to sort of lure in some people that were thinking, oh, the market might go back up. Now we're back into extreme fear mode. We can stay here for a while. We can't stay here forever. It makes sense in bear markets to sort of waffle around, sometimes even get into greed while things are continuing down. And, well, Robschild, why do you think the market's just going to keep going down? Well, it has to do with the fact that we've been dropping for a while. We've had sort of a minor bounce and then more strong, large red candles. This is just simply looking very, very bearish on chart pattern wise. The bears are in control from a longer time horizon and a shorter time horizon right now. TLT on Friday had surprised the heck out of me, popping up 1.38% while everything else is collapsing. Robschild portfolio is doing fine, and so is yours if you invest like me. But I don't know what to make of this. I mean, heck, the inflation data is coming out hotter than expected, and this stock market is dropping. So like, oh, that means the higher rates are, pushing the stock's down. No. So there was enough of a run to safety then, and, not too much fear of inflation. It's sort of the market saying that they're now expecting, rates to be strangling, which, they are. We're back into inverted territory on the 10-year 3-month. So yeah, TLT got a pop. I mean, the blue line was just a closing. I'm going to say that it looks like the wick touched this pink line of this head and shoulders. And so for me, chart pattern wise, that's a confirmation of the pattern playing out. And this pink line here, the target again is to get down to this gap fill area. And so believe it or not, as much as TLT is my favorite place to be, I'm still currently bearish on TLT. If I'm able to free up some cash from other positions, like my gold short that's going against me right now, I will be purchasing TMF with any cash I have in this range at this point. And I still think we're headed down there. But if stocks continue to collapse here and we see a run to safety, we may not get down to that area. It's possible we won't. The chart pattern tells me we will, but yeah, we'll see how it pans out. For a few weeks now, I've been talking about oil, people saying that oil was going to get to 70 and then drop, and that's exactly what it did. It got to 70 and it dropped. Now it seems that this is currently playing out as I've been expecting, and many other chartists. Knockout punch on copper. If you watched Wednesday's show, I was right. This candle, very, very, very bearish tail here. And we had follow through to the downside on Thursday and Friday. Knockout punch. Dr. Copper. The bears took control. Now, granted, I don't know where we're going now from here, but this is typically a pretty strong reversal candle, suggesting more likelihood to the downside than to the upside, the way I'm looking at it right now. I wanted to also bring up SMH, the semiconductor index, dropping on Friday by 2.5%. I just want to note that we are getting real close to the end of this head and shoulders, if you can count it. Granted, this shoulder is pretty long here, but we're getting darn close to back to that purple line there. And if we do, and this pattern plays out, there's a lot of downside in semiconductors. In fact, let's just measure that right. Let's measure that out real quick. You drop the line to the neck. Assumably we'll break it around there. The target on SMH being $123.28. You heard it first here on Robschild. Next, I want to bring up MSOS. This is a cannabis ETF. Is this a bottom? I mean, I'm buying the dip and it just keeps dipping, as a friend once said. I'm amazed at how low this can go. But anyway, I'm still holding it because I don't think this industry is going away, and I think, in fact, there's going to be a winner that comes out of here broad as daylight. Similar to like a Coca-Cola. I mean, it's a new industry that hasn't been allowed to exist for a very long time, and finally there's like inklings of it getting more and more validity. Inklings. I mean, it's practically legal at this point in the United States, and just keeps gaining legality. We're not going the other direction. We're not. So I still see this as a pretty unbelievable opportunity. I only, with everybody else that is already invested in this and is holding it and plans on holding it, we wish we got in even lower. But yeah. Can an entire industry go completely bankrupt and vanish? There is, I guess it's not political risk, it's business risk. So I might have that wrong. I got to go back to my SIE book to it might be political. Political risk is international, right? I don't know. Regulatory risk, let's call it. So it still exists. But are you seeing a clampdown in this area anywhere? Anybody? Not me. I'm still excited about this being an opportunity. I should probably be buying more. In fact, I think I will when I free up some cash. Benjamin Graham does not advise against getting into a new industry. And this is, in my book, a new industry. He doesn't advise trying to pick the winners. He does advise, if you could somehow just buy all of them. Well, index funds didn't exist back then. ETFs were, nothing to be heard of. He'd love that idea, especially for This is just for me, this is actually a Benjamin Graham situation. It's so funny to me, people talking about Benjamin Graham as if the only thing he's good for is, value cigarette butt hunting. He covers everything. People say Warren Buffett has like gone off, into his own realm of thinking. No, everything he's done, everything he talks about, Benjamin Graham already talked about. Read his book, read Security Analysis. Before you try to say Benjamin Graham only did this. No, he went into depth pretty much about everything. But anyway, sorry for ranting. Just had to get that off my chest. Anyway, what do I know? I'm just a guy with a crystal ball and the dragon, and well, that's all for today. That's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.